Good morning, everybody. It's Monday, October 21st, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had December corn up a half at 405 and a quarter. November soybeans were up 3.5 at 973.5, and December Chicago wheat was up a quarter at 573. This morning, the USDA announced the number of export sales announcements. 169,926 metric tons of corn to Mexico for 24. 130,000 metric tons of corn to South Korea for 24. 198,192 corn to unknown destinations for 24. 116,000 metric tons of soybeans to unknown for 24. And 264,000 metric tons of soybeans to unknown also for 24. We are through 14, through 14 of 23 settlements on the harvest price discovery period for crop insurance. Corn is currently at 417 and soybeans are at 1015 and a quarter. Good morning, guys. Hope everybody had a nice weekend. Looking at this morning, funds sold, last week sold a, pretty significant amount of corn, back selling beans. We're going to have probably this afternoon a pretty big number for harvest for corn and soybeans both. So I guess, Dustin, maybe a few thoughts here as we kick off the week, and then we'll throw it around the room.
Yeah, Dan. We're continuing to get just a lot of that, sales announcements for corn. We're clearly competitive right now. And, just like outside markets, I think the chances for a Trump presidency are being built in right now. And so a lot of the way that equities are performing, I think a lot of the odds of President Trump winning, not the polls necessarily, but the actual, sites where you can bet on the odds, have him winning right now. And I think the market's starting to adjust for that a little bit. You're starting to see maybe some of this weakness may be associated to this, especially in the back end. This is kind of what happened, during some of those years we had that trade war. Is the back end, especially when the real was falling, the back end of beans were really kind of leading the charge a bit. Might explain why we're getting some of that extra selling in the back. We've had the dollar index been pretty strong as well. At the same token, though, we're still seeing really good strength in other hard asset commodities like gold. So for the market to continue to sell off right through first notice day, led by the back, would be, I think, interesting to see. I think that what I would estimate happening right now is that you're probably seeing a little bit of slowdown of actually pricing from growers as all of this end user pricing is coming in and buying up that side. So until the sale actually comes from the grower side, I think that, some of this might make sense. We have to remember, Dan mentioned, 14 of 23 days set for crop insurance. A lot of those guaranteed revenues are going to, basically be mostly set here as we get through the end of this week. And this is kind of what happened last year is we did see guaranteed revenues set above where a lot of people were expecting a payment. Your standard 85% policy last year still didn't receive a payment in many areas. And then the market continued to sell off into Feb and March before the next insurance payment was set. It's almost a perfect storm for risk. If the primary risk measure for revenue is federal crop insurance, it couldn't have gone almost any worse than it did last year for expiring a guarantee, not being sold, and then getting a lower guarantee for 24. I would not necessarily expect the same thing happening again for the 25 season, but that is a risk just to consider. You're getting to multiple years of price risk for both corn and beans, and you've got a very uncertain election outcome here. If China digs their heels in with a Trump win and we go right back into a trade war with uncertain outcomes, yes, maybe we could see another round of MFP payments. But in the process, though, it's going to definitely be a big question mark like it was in 2018, 2019.
Very good. Ben, what's on your mind this morning?
I think it's great to see corn business. You would expect this harvest. People that have been sitting on their hands waiting for this time of the year. A lot of this has been built into our projections. So I think we're going to have to see it continue to be on fall to get too excited about it. Looking at managed money, we've discussed now for a few weeks after they flattened their positions up, would there be a proclivity to going back and getting short? And last week, there were pretty heavy sellers in corn and soybeans, 63,000 shorts added in corn, and I think about, 18,000 in soybeans. As long as the weekly closes are lower and the pressure stays there, I think they'll continue to sell. We are butting up against the 50-day moving average in corn again. So, I look at it now as, does the automated trade want to really be committed to a short position? And I think that they're going to get a test in corn sometime this week to see if that's what they want to do or not. So great to see the sales, something that we need to see this time of the year when we're getting overrun with corn. And we still have a significant issue with river levels moving out over the foreseeable future until we see some significant rains to fill that watershed up. So it's a little bit hard for me to get too excited about corn or beans at the moment.
Yeah, and friends in Brazil this morning are talking about, they are getting rains, and they're supposed to be getting some pretty solid rains for the next 10 days in a lot of key areas, which, maybe pairs back a little bit of weather premium there as well. Justin, any other thoughts grain related here this morning as we start the week?
I think it all makes sense, really. We had that, call it August to September, big fund short that, the farmer sold it to the funds when they covered their short position. And this last week, now that the funds were basically neutral, I think even net long a little bit when you look at all the grains combined. They sold it last week and commercials bought it, right? So the funds have kind of been on the other side, or you can look at it as the commercials been on the other side of the funds. But we broke down through all the moving averages. We've hedge pressure coming in. We've got great demand at these levels. So I think we talked about it quite a bit last week, but we're kind of in that sweet spot around $4 corn where we got good demand. We've got good yields. So maybe we're just trying to find a happy medium here, so I can't write the scenario where we go to 350 right now. Personally, I think we could certainly go, take out the lows and make a bad trade for sure. If we have, the last half of harvest, we're probably going to be in the 60% range or more on corn harvest. Obviously, we've flew through the bean harvest with the dry weather we've had. It's been ideal harvest conditions, except for being too dry, probably on moisture levels for a lot of areas. But again, we've, not to sound like a broken record, but that last half to, third of harvest, what kind of pressure does that bring to the market, for storage capacity, low river levels? We'll find out soon. But I'm not a long-term bear, I guess, after, call it Thanksgiving. I think there's some positives, especially in the corn market. When you look at Ukrainian corn production, we still have to prove South America production again. And, South America or Brazilian, and especially corn sales have been, I think they're running 15% below a year ago, and they got a long time before their next crop. So it makes sense that we're doing business. We're competitive. I think this is a story that turns more friendly, 45 days from now.
Well, that's exciting, I guess, to keep our eyes open. It's nice to.
I've been wrong a lot of times, so take that with a grain of salt.
We won't hold you to it.
Yeah.
No, good stuff. Rylan, we got a couple of minutes here. Nice to see cattle slaughter was up 3.8% last week. Pork production up 1.3 and slaughter up about 1.1. What are your thoughts as we start the week here?
Yeah, I mean, it's been a pretty good situation on the cattle side of the market. I mean, we did have a better close last week, as you mentioned. Slaughter has just ever been increasing, and beef prices have just been skyrocketing. I mean, wholesale beef was, on a nearly $10 rally just last week alone. So packer margins are good. Cash was up $1. I mean, there really hasn't been anything to set the market back at this point. So we've had funds really support the rally. They bought 8,700 contracts as of last Tuesday, and we're net long 85,000 contracts. So they're still adding to length here as well. So it just kind of feels like you've got kind of this demand-led bull market. And overall, it just doesn't seem to be like we're really worried about any of the potential kind of bearish factors. And we're seeing that in both places. So it seems like managed money is clearly sticking together between hogs and cattle. They want to be long. They want potentially see prices higher, going into the end of the year, or at least in this quarter for now. I mean, it's a nice position to be in, but you always want to take it just, on the cautious side, just because, I mean, I think everybody's looking at the price structure, just saying, when is this thing actually going to fall out of bed? So, I mean, like I think that's a good mentality to have going into the tail end of the year, just in case we see things really start to change quickly. If this isn't just some support, because of the election or because of some outside factor. But overall, I mean, the news is generally pretty positive on the cattle side of the market. We did see things and cash side of things on hogs start to turn around a little bit on Friday. Cash was down pretty sharply, down like $4 at 72.05. Cutout was still up, but we're just not shaking anybody out. We're not scaring anybody with lower cash prices in hogs right now. So I think overall, it's probably a hedger's market on the hog side of things, just because, I mean, if there is any kind of liquidation, the funds have been really aggressively buying this market. They bought another 4,300 as of last Tuesday, and are net long 74,000 contracts. So that's not too far off of a record position. It's only about 25,000 contracts off a record. So I think you start to hit that danger zone a little bit without really much of a story. It just seems like everybody's coming after it, and there really isn't too much meat on the bone, so to speak.
Wow.
I don't know. I paused for that one. Pause for applause.
That's Arnold Schwarzenegger type.
Wow. He loses
Sorry
Fun
about
Fact
that.
Friday, and he's just got to sneak one in there,
I didn't mean to. It just kind of slipped out.
Oh, very good. Thanks, Rye. We've got a couple things pointing out here. We got crop progress conditions. That'll be out at 3:00 this afternoon. We'll take a look at that in our evening commentaries, talk about it tomorrow morning. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything AgYield. And once again, thanks again to everybody that tunes in every day. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there, guys. Hope everybody has a great start to the week, and we look forward to talking again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.